interestingly found out that Indian equities are pretty high up on the list.
We're also starting with a big wealth opportunity. So the size of the wealth market in India is around $2.8 trillion, and it's solidly growing at 8%. So it's not just about the ultra-high net worth, though those stats are incredible, 169 billionaires, astounding. But let's also talk about the rise of the millionaires. We expect by 2035 there to be over 10 million millionaires in India.
10 million millionaires.
10 million millionaires. It's even hard to say, but it's extraordinary. And that sort of opportunity is what we're looking at HSBC. And when I say, HSBC is looking at that opportunity, our ambition is to be the #1 wealth management player in Asia. And you cannot be the #1 wealth management player in Asia without being in India. So it's natural to bring global private banking here.
Let's talk about the options and really what's hot in the market. And you're sitting at the center of all of that action, right? From, I don't know, maybe about a year back, everybody wanted to be in crypto, from the man on the streets to the so-called smart money bags, right up at the top of the pyramid. So what's hot now? And since I touched the subject, what is the view on crypto now?
We're just as cautious on crypto as we were before.
Okay.
We're very glad that we did not suggest that our clients play, and I think we say speculate in crypto. That's something that we don't do. It's been an interesting market. But let's talk about what is interesting right now and where we are advising our clients. Now, first opportunity is capturing Asian growth. Indian is obviously a compelling part of Asia growth, but as we look across Asia, Southeast Asia, North Asia, and we compare it to the relative weakness around the rest of the world, capturing Asian growth is a key theme. The second thing that we're really looking at is supporting that with solid foundations. It used to be that cash is king. Cash is no longer king. We are looking to make sure that our clients take advantage of quality credit and quality yield and really protecting themselves and locking in some of those quality yields, because we do expect interest rates to soften in the medium term. So just locking in those bonds, we expect them to outperform the cash rates. So making sure that people have a solid portfolio even as they stretch into Asia. And then our third theme is as they stretch into opportunistic. So that third theme is we're in a dislocated world. We're in a bit of a disrupted world. What we're looking at is multi-asset solutions that can really penetrate and are actively managed and take advantage of those opportunistic moments. So we're overweight on hedge funds. We're looking carefully at private equity opportunities, infrastructure opportunities, and even into some real estate, just to make sure that our clients are actively managed and they really penetrate that opportunity.
Got it.
And the fourth one that you mentioned that I can't resist coming back to is technology, and taking advantage of technology. There's a lot of talk about AI, and that's fantastic. And when people talk about it, they tend to talk about the venture capital opportunity. We think within scale businesses, there is tremendous opportunity to deploy AI. So we look at tech, not so much at the moment in the VC opportunity, but in profitable tech, and really using that AI to fuel the growth of existing scale corporates.
In terms of the equity opportunity right now, whether it is listed markets, whether it's private markets or whether it's public markets, where are you telling your clients to go out and search for those opportunities?
As I said, profitable technology, so looking across the space there. Infrastructure, particularly green infrastructure, and the companies that support green infrastructure. And if we look at India and we look at that net zero goal, the investment required is 5 times the current investment to get to those green infrastructure goals. So any of those companies that are looking at solar technology, wind technology, or the components thereof, tremendous investment opportunities. So really looking at that. And then also just energy across the space. We look at energy demands and the technology underlying energy, whether it's battery, et cetera, there's tremendous opportunity there as well.
So you mentioned interest rates and how you're sort of looking at locking down yields as well. What is the sort of the general sense that you get out there in terms of what will happen in the credit markets, maybe in Asia and India, pretty much around the world, because that's where there's been a bit of a disconnect with markets, I think, hoping that we'll get rate cuts by the end of the year. But a lot of central bankers have been going ahead and hiking rates in the last month or so.
We have seen that. We have seen some hiking rates in unexpected ways. And look, we are cautious on rates at the moment. The part where we're interested is actually in India, where when we're looking at the growth at the moment in India and we're looking at that solid growth, we're wondering whether not only does India pause before some, but maybe it starts to cut rates before some. And that's why, with respect to Indian equities, we are strategically long, but we're also tactically long. We're strategically long because now India's growth means it's the 5th largest market cap in the world, and so people are allocating to India as a natural part of that diversification that I talked about, and that's important. But the other thing that we're saying is tactically it's quite interesting that possibly we'll see more uplift in India if rates move here first. Very hard to tell. I think the other interesting thing, just while I'm on the trend of Indian equities, is one of the things that makes Indian equities even more interesting is this strong domestic growth is endogenous. Because net around the world, we're neutral on equities, but we're overweight Asia and slightly overweight the US as well. But within that, India is quite an interesting perspective to look at for an equity player.
So how do you take a view on a market like India? And I remember this report that I think the wealth management arm put out saying India is the destination to be in for the next decade and beyond. That was quite a headline, right? So help us understand how you're looking at India from an investment perspective, and whether this whole issue of slightly expensive equities, how you tackle that.
I think when you look at it, first you look at the economic growth of the core market and you say it's broad-based. Then you've also got to look at the credibility of that growth. And when we talked about rising middle-class incomes, we talked about urbanisation, we talked about the young coming into the working market, and we talked about the range of corporate opportunities and entrepreneurial opportunities here, not least technology, you really get to a very strong story for India. And if India can continue to power through that, then some of those valuations will not only be justified, but quite interesting.